Are you willing to pay someone thousands upon thousands of dollars to invest your money in the stock market to not even be able to keep up with the market, let alone beat the market? They can't even match the market in most cases. Well, the scary thing about it is so many people are doing this right now and they don't even know it. And this is known as investing in mutual funds. So in this video, I'm going to show you why investing in a mutual fund is a terrible idea. And I'll go over the better, or I should say the much better alternative route to keep way more of your money in your pocket for when you're ready to retire. So with all that said, let's get into the video. What's up, guys? Welcome back to the channel. My name is Johan Lorenzo, and in this channel, we talk about personal finance, dividend growth investing, and trading options. So if you like making money, hit that little red subscribe button and come along for the journey. It helps support the channel and it's free. And you know what they say, we all like free. So go ahead and subscribe and I would greatly appreciate it. So on to the meat and potatoes here, all right? Mutual funds, ay. I freaking hate mutual funds. And it's pretty sad to see some famous financial influencers like Dave Ramsey promoting these types of investments. And let me make this clear right now. Once again, I am not a financial advisor. This is not financial advice. This is for pure entertainment only. Pure entertainment, all right? So don't sue me, bro. Let me tell you why I think this is terrible advice. Mutual funds have fees that eat away at your money over the years. Sometimes they're even 100 times the fees of an ETF. Yes, you heard that right. You can be paying someone 100 times more in fees, and they are most likely not even going to match the market. And the reasons for these high, outrageous fees are because you're giving your money to a professional expert, and he or she is going to beat the market and be the best investor in the world. I mean, why wouldn't anyone want to do that? Well, the truth is 96% of mutual funds will not even match the market throughout any 10-year period of time. Let me show you a little snippet from the famous Tony Robbins. He explains it best.
A lot of very financially astute people are not great investors. What you don't know will hurt you. And so I give you two simplistic things that most people probably have heard of, but they haven't applied. Almost everybody, when they go, where do I invest? Well, 90% of the population puts it through a 401k. 90% of those put it into a mutual fund. Makes sense. I'd go to someone who's going to manage my funds for me. They're going to make better decisions than if I just put the money in the market or an index fund. It's just not true. 96% of all mutual funds fail to match the market over any 10-year period of time. I interviewed Nobel laureates. I've looked through the statistics. It's a fact. You go, I'm smart. I'm going to find the 4% that succeed. 96%, but I'm going to find the 4%. Do you play blackjack?
No, I don't.
If you watch it, if somebody gets two face cards worth 20 and you can't go over 21, there's only one card you can get to go higher. It's an ace. Do you stay or ask hit me? Well, if your inner idiot says hit me, you have an 8% chance of getting that ace.
Yeah.
You have a 4% chance of finding the right mutual fund. So I tell people is you don't want to go there. The other piece you got to understand is that fees do matter. When I saw this, I was like, this is crazy. And they started showing me that somebody's paying 1% in fees versus 3%. The average mutual fund, according to Forbes, is 3.1%. That difference is almost 50% of your earnings over time. In other words, two people could start out with the same money, $100,000, and they grow it at 7% for 30 years. And one of those people paying 1% is going to have almost $600,000, 100 to 600. That's the growth. To be specific, it's 574,000. But the person that paid 3% in fees still got a 7% return. Same stock, same bonds, just a different environment. 3% fees, they've got 324,000. So 40%, $250,000 is gone. For what? If I said to you that I want you to invest in something, Merrick, here's what we want to do. I want you to put up all the money. I want you to take all the risk. I want to put up no money, take no risk. I win when you lose, and I win, you win. And when you win, I win up to 60% of all you're ever going to earn. You wouldn't invest in that in a million years, but that's 90% of all mutual funds. I'm a passionate man about these areas. So you got to get started, and you've got to become an insider, or you're going to get taken advantage of.
So don't try to beat the market. Be careful of the fees you pay.
Yeah.
So if you're new to investing, you might be thinking, what the heck is a mutual fund anyway? A mutual fund is basically a large basket that holds many different stocks that are actively managed by the manager of that mutual fund. This mutual fund manager basically moves things around within the basket with the hopes and purpose of beating the market, which we must remember. Throughout the history of the entire stock market, 96% of these mutual fund managers can't even match the market in any 10-year period of time. Now, you add on top of that their fees, which can sometimes be up to 3%, and you're at actually an even bigger loss. So, what is the better solution? Invest in an index fund that tracks the S&P 500 for a way cheaper price, basically for free. My personal favorite is ticker symbol VFIAX, aka Vanguard 500 Index Fund Admiral Shares. Just like the mutual fund, VFIAX is also a large basket that contains many different stocks within it. When you purchase a share of VFIAX, you are spreading your money throughout all of the different stocks within that index fund. The great part about it is you're doing it for a fraction of the cost, which in this case would be 0.04%. That's not even 0.1%, ladies and gentlemen. So someone who has $100,000 in a mutual fund with a 3% fee will pay $3,000 a year in fees. Even if that fund doesn't make them any money that year, that fund will still take their cut out of their account. Now, you do the same scenario, but this time, the person that has their $100,000 in an index fund like VFIAX, that individual's only gonna pay $40 in fees for the year. That is a $2,960 difference that you get to keep in your pocket. All that money you're saving in fees will help boost your account over the years. That's compound interest. Like really, come on now. It's really a no-brainer. When it comes to it, if you don't have time to manage your investments, just put your money in an index fund with a low net expense ratio and let your money compound and grow over the years. You'll have a way better chance of making more money that way. I myself have a 457 account set up through Nationwide with my job, and I have 100% of my allocation with VFIAX. And a quick side note, an index fund and an ETF are basically the same thing. The only difference is an ETF, which stands for Exchange Traded Fund, can be traded just like you would a regular stock. You can buy it and sell it several times in a single day if you'd like to. On the other hand, an index fund only has one window to buy and sell at the end of each day. A few ETFs that I personally like are ticker symbols VOO and VTI. Either one of those are a solid set it and forget it type of investment. So the next time you're out and about or on Instagram and a random guy that sells life insurance for a living tries to scam you out of your hard-earned money by pitching you a mutual fund that's controlled by professionals, oh my God, really, bro? Just tell them, go kick rocks. You don't have to be a rocket scientist or hold a Series 6 license to have common sense. Thank you guys for watching, and I know it's been a little hot minute since I've posted any videos recently, but I'm still gonna keep posting, guys. This is something that I really enjoy doing. I've just been really busy with work and just life in general throughout the holidays and stuff, and I'm building a house, so that's pretty fun in itself. But I really do want to thank you guys for coming along on the journey, and don't forget to smash the thumbs up button for me, and don't forget to subscribe to the channel. And with all that said, until next time, peace!